We are from Faculty of Economics, University of Indonesia. We are from Financial Accounting Theory class. And today we are going to have a debate about whether IFRS should be principle-based standard or is it should be a rule-based standard. And we are about to start from the positive theme, and we are from Ichsan. We start the debate. Thank you.
Okay, before we start, first we have to know what is the definition of IFRS. IFRS is an international financial reporting standard that is generally accepted through the world and designed as a common global language for business entity to do financial report for each business entity around the world is understandable and can be compared to. And the big question is, are IFRS rule-based or principle-based? And then the next one is, what is the importance of having a accounting standard? The first is to reduce the probability of false financial report from any company. Second is to generalize financial report so the accounting information that the public drive is not confusing. Third and last is to reduce asymmetric information between company and public. First of all, what is principle-based standard? Principle-based standard is an accounting standard that rely on auditor's professional judgment to judge an accounting transaction, as the standard only gives the general rule to follow. And what are principle-based standard based on? The principle-based standard is based on a conceptual framework that provides a broad basic for accountants to follow. And then, what is the important characteristic of principle-based standard? The first one is flexibility, and the second one is principle-based standard is less complex than rule-based because of the potential situation that may happen outside of the rule that the rule-based standard have implemented. Next one will be
the response from negative team will be opened by Aditya Edovan.
What we want to talk about present in negative field. We want to talk about the weakness or the disadvantage of a principle-based standard rely on IFRS. First, we can see or we can know that it's difficult to compare accounting statements between period and between others company or other industry. The second, because of professional judgment which is flexible, based on principle base, then professional can make a judgment which is not describing the economic substance. And third, because of the professional judgment mistake or fraud or error, the risk of reporting a financial statement is increasing.
And we are moving on. Another response from the positive team will be presented by Alvin.
Thank you, everyone. First, I want to respond to the previous slide about the negative 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 theory of the principle base. First, the negative team state that when you use the principle base, sometimes it is difficult to compare because the other company around the industry have a unique business line and have a unique reporting. But actually, when I search on some kind of journal, they say some journal on the internet. They done some researches and it states that removal of some rules can sometimes be associated with increased clarity and comparability. It means that when you use rule standard, it is more complex, it is detailed, and compared to the principal standards. So by using the rule-based standards, there are more specific and detailed information that you requires to follow than the principal standard, which generally according to the conceptual framework. So what I'm trying to say is actually the rule-based standards could produce a more incomparability reporting. So it's hard to compare one of report to another report because they contain detailed information rather than the principle-based standards. And then what I'm trying to say is the first point is difficult to compare, and the second is the principle-based standards could not follow the economic substance because they use professional judgment. That's what the negative team say. And then from us, although the accounting use professional judgment, it is clearly and it is merely to create more flexibility. So the accountant does not appear. Strict by the rule, by the overwhelming rule of the rule-based principle, rule-based standards. And that's from the economic substance. And then the last about the risk of reporting of false reporting. From my team, from the positive team, if there's any risk of false reporting, the users of the report financial report and so on, and annual report, they can also make a judgment. So what I'm trying to say is, if there is a risk of a chance of higher false reporting, it can be traced from the auditor itself, because most people who get listed on the capital market, stock exchange, requires audit conduct from the external auditor. And from what we have, it is that rule-based mostly sometimes can create a false reporting too, because from the second point on the rule-based we have witnessed, sometimes company couldn't meet the requirement of the standards due to produce timely reporting. So if you want to produce a timely reporting, like so the financial report still relevant, don't get too long to release it. The company couldn't meet the requirement, the standards of the rule-based standard, because it is very complex, it is very detailed, and some company is overwhelmed by their work, by their effort, by their other business to just meet the requirement of the rule-based standard, which we all know that is very, very complex, like the USGAAP and so on. And third, what I'm trying to say is that auditor is facing a great challenge by the rule-based standards. Why? Because rule-based standards drives or tend to create earnings management by the managers. So they tend to overrule. So the manager tend to create workaround on earnings management. So they tend to get financial engineering, which makes it harder for an auditor to trace the report. So that's it from us due to response from the negative team. And then
next we are going to have another response from the negative team, and why they are not agreeing about IFRS being a principle base. And we'll have Adit.
Okay, thank you for this chance for me to, let's see, I want to try to knock down the positive team. At first, I want to try to fight back the arguments from the positive team, especially the one from Alvin, where he said that rule-based could produce false reports rather than the principle would. It's like the principle base would produce the one would describe it, the company's situations more true. But there is a positive side about the rule, although in this chance we are talking about the weakness and the positive side of the principle base. I want to try to describe the positive side also from the rule-based accounting. Well, let's see. If there's a standard that based by the rule or rule-based standard, actually, if it's actually become a rule, then there would be some laws that protecting it. That means that if you do something that already stated in the standards, it means if you don't do it, you're doing something wrong. Then if you're doing something wrong, there would be consequences. But on the principle base, those things are not stated. They only talking about the wide structures. They only talking about what kind of situations you're facing, then you could use this. But if you're facing these situations, then you could this. It's only a wide structure. So it would produce more something legal liability, something like that, because it is hard to consider something. Is this something is illegal if you are stating it not like following other industries that doing the same things for that thing. But when you're using the rule-based, those things wouldn't be liabilities. That's why many accountants have encouraged the standard setters to promote rule-based standard, because accountants would be they would have their hands off of the reporting as it's something like, okay, I'm already doing everything that is based by the rule, so I don't have any wrongs in these things. But if you're doing some principle-based standards, then you're creating a report, then there is still some like legal liabilities that accountants could hold for. They could say that when they are stating some financial statements, there are some people who could say you're stating this wrong, and you could those accountants could be sued for something like that. And then for the next one is the you say that the rule-based standards would encourage managers to do the crimes. Is it something like doing frauds and something like that? But because I think I already heard that before, like when you're facing, when there are so many rules, you would look for the loopholes to avoid those rules to constrain you. But here I could say that I think I could say also the same for the principle-based standards, although it is ruling the wide, that what I said before, the wide structures of the practical use in the field. But I think here I could state that you would need a higher competencies when you are reading a financial statements that is using the principle-based standards. I think I could say that because when you're using the rule-based standards, I think it's already stated that maybe this number would describe this, or maybe some assets, this kind of asset would be written off in this method. But when you're using principle-based method, it's like already said by my friend Edovan, you need professional judgments to do that. And when the financial statements are produced, I don't think that people that use those financial standards have the same judgments with the accountants who produce that reports. That would mean that maybe if I'm the company, I could say, could you use this method? Because I think there are so many people that understand this kind of this method to write these things down, and maybe those methods could use to deceive those new investors. And then I'm also trying to exploit the weakness from the principle-based standards is the principle-based standards also, although it is describing the wide structures or on how should a financial report be written, but I think it is still, it depends on how deep those standard setters state those principles. Because if those things aren't deep enough, you would continuously found new situations that even your principles couldn't handle those kind of things. You would need like stating new principles all the time, and in the end the principle would become a rule-based. And I think that is from me for now, and please I need feedback from the positive. Thank you.
And we are going to have another response from the positive team, and it will be me. My name is Evan, and I'm going to say, first, I'm going to give out my points. First thing, so the principle-based standard over the rule-based standard. First thing first, principle-based standards are simpler. Why? Rules, as mentioned before by Alvin. Rule-based standards becomes more, what do we say, complex, complicated, it's hard, it's costly to implement. Most companies are not even able to produce good financial reporting because following the rule-based standard is too hard for them. It's too incomprehensible for them to make it. And then the principle-based standard, they supply broad guidelines. Before you said that there could be illegal liabilities, there could be a confusion because we're not using the rule-based. Because the principle-based is too wide, it's too broad. That's the point. Principle-based standard provide broad guidelines because these broad guidelines can be applied to many situations. It's not like before you mentioned that principle-based standard sometimes makes another principle, makes another points and options for their standards, and then you continue making a new principle and new principle to tackle the new situations that you come across. That's not the problem with the principle because they are giving the broad guidelines. Even the fact is that those situations, those actions, those new rules, it's actually happen at when we are using rule-based standard. Please continue the slide. Yes. These rules-based standard, rules often made arbitrarily. It is one of my points here in my slides. Rules-based standard often made arbitrarily because they are making on an ad hoc approach. A new situation, new rules, new problem, new rules. That's what happened with rule-based standards. And that kind of problems, that kind of ad hoc approach can be minimized with using principle-based standard. And then, let's go back to one other slide. And my third point, they improve representational faithfulness of financial statements. Why? Because the principle-based standards, because they have a broad guidelines, they need professional judgment. You said we need a professional judgment. Yes, it is required in a principle-based standard usage because this is so broad. You need professional judgment to decide whether a transaction should be accounted for and how it should be accounted, and it shall be accompanied by financial notes in the financial statement to explain why an accountant write the transaction as that way in the financial statement. And then, secondly, this is an evidence. Unfortunately, I'm very sorry to include that I forgot to include the data, but the evidence suggests that managers are less likely to attempt earnings management when they are using principle-based standard. Because why should they? Because there are no rules, there are no boundaries to work around with. If you are going to make to state a certain financial engineering with a certain earnings to write on the financial statement, they don't need to be hard on themselves and making earnings management very difficult, because they only have to state as it is because it is allowed, not like the rules-based standard where there are many complications when they are trying to make a statement on a certain policy. And then it is Another point, the rules present opportunities for financial engineering. And what I mean by financial engineering, a certain company can make certain policies that actually doesn't really describe the financial condition of the company itself. Like we discussed before in class, that whenever a company have a legal liabilities in a certain manner, they on their financial statement they usually have on that year they will usually present a smaller income earnings, and that happens when there are rules based standard applied, because in principle based standard they cannot do it. They just simply can't, because even though it is fraud, with the principle-based standard, they can, with professional judgment of auditors, of accountants themselves, they will have fear that another auditor, another accountant shall detect the financial engineering itself. That is why we should go with principle-based standard. And next, another slide. And there's this principle-based standard. The driving notion of the principle-based standard, as mentioned by Ichsan before, there are openness and flexibility. Most companies can produce a more flexible policy, more open to plenty much every other policies on their usage. That's why the world use it. The world, as it is, can use principle-based standard more openly, and then the principle-based standard exert a lasting effect on the educational background and professional skills of accountants and auditors. Because we're using a rule-based standard, the professional accounting professional has become more dull. And what I said becomes more dull because we are working with a set of rules. We are working with sets of boundaries. We cannot be creative. We cannot explore the possibilities of accounting policy. And with a principle-based standard, it will produce a lasting effect with the to the educational background and professional skills of accountants and auditors. Because with the professional judgment required, then the professional judgment itself need to be developed within the accountants and the auditors. They need, I just say that in simple way, auditors and accountants need to be smarter with the principle-based standard, and the usage of principle-based standard pushes them to be smarter. And then I need to say this, rule-based standard often becomes inconsistent with the conceptual framework, or I should say the principle. Let's say US GAAP, even though they are rule-based standard, but most of the people said that bad. Yes. Here it is. Here's one point that I also looked up and found on a journal. You said that US GAAP are principle-based standard. Yes. But after a long usage and after a much influences from political, from the accountants and from the companies, it has become a rule-based standard. Too much guidelines, too much detail, and on the usage of these on the standard, that it has become a rule-based standard from the USGAP. And from if we see the rules that is described on the USGAP, it is sometimes we found some inconsistencies from the rule and the conceptual framework of the principles itself. That is why we need to use the principle-based standard, because it provides more broad guidelines. It provides us more flexibilities and such things, and it is better for the whole companies and all over the world to use principle-based standard, because in one journal I found that a German company is using a German GAAP, and when they are about to open their stock shares on the New York Stock Exchange, they need to use US GAAP. Now, I must say, in that year, their financial statement shows that they have, on using German standard, they are showing about 600 something million in earnings. But when they are using the US GAAP, they actually have got 60 million in loss. That tells me that the rule-based standard over countries has become incapable of describing companies, because they doesn't really be comparable over a certain country, over a certain place. It can be compared between companies, but when we are looking at a global usage, between states, between countries, from one country and in one company, and when they are, just like the example that I gave off, it doesn't really makes the company be doesn't really describe the performance of the company, because the standard is rule-based. It's too strict. It doesn't give too much space. That is my point why we should use principle-based standard over rule-based standard. And another response?
I will be taking on the response from the positive team. And here is, I'm sorry to say, there are something that you said, I think you're finding it kind of wrong, something like that. But I'll try to find it one by one. Okay. First, before we forget, the last point we said about the Germany's and USA, about the GAAP. Remember that I have said that GAAP is a principle-based standard, okay? And then you complained about, when using the German GAAP and the US GAAP, there would be a difference. They are from profits into loss.
Yes.
And you but here I could say that it's GAAP is a principle-based standard, right? Like it's less.
But it has become a rule-based standard, because there is too much rule. There is too much influence on the standard sectors to make a rule.
No, can I see? Yeah, I can see it's from the first slide. I'm sorry. Okay. This. Next. Okay. Now, this. This also one of the. Though you say that there are too many rules or something like that, but I think the difference is not based by the rules, but it's because the principle itself. I think there are the differences in principles between Germany and USA. So they could see that, and this is why this is one of the weaknesses of the principle-based standards, that, as said by my friends before, it is often incomparable because it is based by professional judgments. As you can see, that the professionals from the US and the Germany have different judgments about some things, and that causes those differences in profits and loss. That's not even rule at all. That I could almost say it is purely based on the judgment of the professionals on the US.
But the fact is that
I'm sorry. I'm just want to finish it. Okay. It is not. You could say that it is stated that being overly rude, something like that. But I could say that it's those things, those stated that GAAP are too many rules are stated by the standard codes that is based on Europe. That is not stated by those in the US, because if it is stated by the US, because you know that right, that the Germans have to change their financial statements into the US GAAP, because the markets in the US still believe that they still trusted that the GAAP in the US are still describing the real conditions based of the companies.
It is obligatory to make financial statements with
In the US.
GAAP.
Yes.
With from the SEC.
Yes.
SEC.
Okay.
Securities
Yes.
Commission.
And why? Could you say why they need to change it into the US GAAP?
Because it is obligatory.
Yes, it is obligatory. That why is it become an obligatory?
Because most of the people,
Yes.
most of the companies in the United States, it is using US GAAP. But the problem is with the US GAAP and with German GAAP, and let's say with PSATA, here we have in Indonesia, has become incomparable between countries.
Yes, that is the point. That is the point that when you're using GAAP is a principle based. You couldn't say that the GAAP is a rule based, because if you could say that FASB on the USA, what is their objective by creating a US GAAP? The main objective, you could say it. You could see it on the US GAAP. They tend to create a principle-based standards. They are not or want to create rule-based standards. So that is the weakness of the principle-based standards. It is very incomparable. Okay, thanks.
And this is the end of our first presentation of our debate on whether IFRS should be principle or rule-based. We hope you enjoy our presentation, and thank you and good day.